uh, our YouTube channel for our monthly webinar with Raj. Thanks for joining us, Raj.
Thank you, Will. Thank you for having me.
Before we get started, why don't I do the disclaimer real quick? It's been up there. Market Chameleon is not a registered investment advisor or broker-dealer. Either am I or Raj. The information we're giving you is for informational purposes only. If you have any trading questions, ideas, things you wanted to know about your account, best thing to do is talk to a licensed broker-dealer. With that, Raj, why don't we tell the Chameleons a little bit about yourself as people are coming in.
Sure. Yeah. Hi, everybody. My name is Raj. I live in Vancouver, beautiful British Columbia, here in Western Canada. So I am in the Pacific time zone. I'm an architect by profession. So I have my own business, architect in the sense of not a software architect, but a real architect. Build buildings, hospitals, schools, all that kind of stuff. And I do trading part-time. And I've been a Market Chameleon subscriber since a year or so. And I find it really useful, learning a lot from the whole community, especially from Dimitri and many other veterans here. So that's about me. So I am not an expert by any means. I'm just trying to share what I know. So I'm sure there are a lot more experts out there. But I'm happy to share what I know.
Now, Raj shares, not only does he come on and do a monthly webinar series, but he also is instrumental in a Discord group that was founded by Jake Kilby, aka the Doctor, who also does really a bi-weekly show, The First Call. We love Jake, and he was actually on Monday. You can check all our videos out on the Market Chameleon YouTube channel, and there's a link on the site for a lot of the stored videos and content. All that is free to anyone who wants to use it. Any questions, Raj, we'll put into the chat. Are we going to allow people to raise their hands?
Yeah, they can come on live if it's relevant, and you can come live on Zoom and ask your question, or put them in the chat box for Zoom or YouTube, and we'll take care of them.
Yep. So if you're live on the Zoom, if you're on the Zoom right now and you want to come on and ask a question of Raj, just raise your hand. I will see the question and I will get you on. We're also streaming live on YouTube chat. We don't want to forget about our YouTube subscribers who are coming over to see Raj on YouTube. I put the link at the start of the chat to the Zoom. You can pop on over to the Zoom if you want and listen to us live, because there's always a delay on the YouTube, but you can also ask your questions live. By live, it doesn't mean you have to show your face on a video if you're uncomfortable. Just turn off your camera and just turn on your sound, and it'll be good to go. So with that, Raj, why don't we get going?
Sure. Thank you, Will. Hi, Jake. I saw Jake's chat message. Nice to see him live on Zoom. So today's topic is it's really a very day-to-day activity. It's a very simple thing for veterans. How to find the right prices and how to get good fills on your options. Most people are familiar with how to do it on stocks, but it's a little bit tricky on options. So we'll deal with that, and the way I do it. I'm sure there are different methods of doing it. Different platforms have different algorithms and stuff like that. But so we're going to do what's called as middling options. So finding the best price, either the mid price or better than the mid price, for filling orders, individual single-legged options or multi-legged ones. Okay, so I'm going to show live the platform which I use, this thing called Swim. So there may be other platforms but I don't have them, so I'll be only using thing called Swim. Having said that, the agenda for today is very simple topics. What is the bid-ask spread? I'm sure most of you know it. And what is the relationship between spreads and liquidity? So liquidity is very important in options trading, and how to get better fills and middling, like we spoke. And the other one is a little bit advanced, averaging, scaling, and laddering into positions. So these are the 4 topics I hope to cover in today's webinar. So hopefully our time should be sufficient and we should be able to take some questions as well. Okay, so let's get into the first one. What is the bid-ask spread and liquidity, and what's the relationship, right? So in the markets, wherever securities are traded, commodities, futures, options, stocks, there is a buyer and a seller, and usually there is a difference between the price. So let's get this. So for example, the seller here is selling at 99.25, and in the market he places it for that, and the buyer buys it from the market at 99.75. So you can see that there's a 50-cent spread. Usually this is captured by the market maker, or if you're lucky, you can get it directly, at this. So this width between what it is sold for and what it's bought for is called as a spread. And this spread depends on how liquid the market is, in the sense how many transactions are happening, how many buyers and sellers there are, and what is the volume of the trades. So that determines the spread. So as the volume increases, as liquidity increases, spread will start getting smaller and smaller. So there is a direct relationship between the spread and the liquidity. So this is very important to note, especially in options. Okay, so what is middling? Middling basically means finding the mid price, or trying to get close to the mid price or better than the mid price. So in an options chain, this is just a screenshot of an options chain from Market Chameleon. So you can see that these are the strike prices. This is Netflix. I just captured this today. These ones between these two lines are at the money options. So at the money options, you will notice have a tighter spread. But you can see that the ask price and the bid price, and this is kind of the mid price, which is the theoretical price calculated by Market Chameleon, but typically this is also called as the mid price. And as you start going away from the at the money options, in either direction, you start seeing the liquidity and the reducing and the spreads increasing. So the options at the money tend to be most liquid, and the spreads are tighter. Okay, so middling is the process of finding the middle of bid and ask prices for options, stocks, or securities, and all commodities, stuff like that. So it is the process, right? And we'll go through what the process is as options traders. We'll try to see what our process is. So middling is very important for price discovery, and ignorance of this can lead to losses even when you make the right place. So if you do not get good fills on your positions, so even if you're right on the direction, you can still lose money if you end up paying too much to fill that position. So it's really important. Okay, so just broker interfaces, I just got some screenshots from different. So this one on the top here, this is Think or Swim. And you can see here, when you place a trade, at the bottom, there is a row which tells you what is the mid price and what is the natural price. This is their own internal algorithm. So you will get immediate fill at the natural price. But if you want a better fill at the mid price, it might be a little slow, but you can still get a fill at mid. And let's say, for example, this one is selling. This is the position where you're getting a credit. So mid is 3.2. So let's say you want 3.25 for this. It will take a little longer, and you may not even get the fill. So depending on whether you are buying or selling, this will change. This is from IBKR, which is Interactive Brokers. That platform is called Trader Workstation.
So Raj, we did have our first question. Sorry to interrupt, but it's about when you say that's Interactive Brokers platform, not Thinkers. Someone's asking, how do you use TOS in Canada? Is that the Traders Workstation, or is that a
Think or Swim? It's probably a question from a Canadian. You need to have a US account. You need to. I used to live in the US, so I pay taxes, and I have a US social insurance number. So I have a US account essentially with TD Ameritrade. There is also TD Ameritrade in Canada. They also use Think or Swim, but you can trade on the Toronto Stock Exchange with it. So you do get it on both sides, and you can also use the Canadian side of Thinkorswim platform to trade the US markets, but the commissions are higher. So I prefer TD Ameritrade on the US side because they have better commissions.
Now, Raj, if someone who's listening tonight wants to talk to you about accessing from the Canadian markets, are you willing to do that on the Discord, maybe?
Yeah, sure. I can guide you.
All right. So I'll put a link both in the Zoom chat and on the YouTube to the Discord. Come over and you can check out what's going on in the Discord. You can check out Raj and Jake. And if you do have questions, I know YG is on. He's obviously from Canada and had that question. I'm assuming he can DM you or just put it in the chat on the Discord, for sure, and get in touch.
Yeah, just get into this is our Market Chameleon option trading server, and we have different channels here. But you will see me, for example, this is my profile there. So once you're on Discord, you can directly send me a message, or the Discord even allows you to talk and screen share and all that kind of stuff.
All right, I just popped the link in both spots to the Discord. Thanks, Raj.
And thank you, Will, for that. And the Discord server we have is a private server in the sense that it's not public. You won't be able to find it just by doing a search on Discord. We kind try to keep it to serious people and try to keep the riffraff out. So it's by invitation only. So it is a privilege when you get that invitation from Will.
Perfect.
Okay. So this is the Trader Workstation platform, and you have similarly, whenever this is for a stock for the ticker IBKR, and you can see that the bid and ask, and you can execute the order at different prices. Either you can get somewhere in between. Okay, this is Tasty Works. I think it's called Tasty Trade. Yeah. So Tasty Trade has similar, like Thinkorswim, they have the natural price and the mid price, and you can slide this along between this to find the right price. And this is from Market Chameleon. So whenever you design a strategy on Market Chameleon also has an interface similar to your broker where it pulls the prices, and you can now get the pricing for the strategy. It's very usefully gives you, like for example, for this strategy, which was the credit iron condor for Netflix that I was opening today, the credit I can expect to get like an immediate fill at this price. The bid and ask, the calculated bid and ask for all of these 4 legs was between 7.2 and 8.45. The midpoint of this is 7.83. So now when I want to place this trade on a broker platform, if I want an immediate trade, if I put in this price, I'll get an immediate fill. But if most of the time, what you want to do is you want to get it filled at either the mid price or better than the mid price. And if you can get it filled closer to this asking price, 8.45, then you are already winning in that trade. So you can see that if you're opening just one contract, it's a difference of $125 right here. Just one contract, right? So it makes a big difference. $125 could be 20-30% of your profit. Okay, so let's move on to the next slide. Then we are going to also look at scaling, averaging, scaling in and out, and basically dollar cost averaging or scaling in and out of a position, or it's also called laddering, depending on whether you are doing like different time frames and things like that. Okay, so with that, I'm going to go and share my screen on Market Chameleon. So we'll look at that. Let me see if there are any questions in the chat. Into Discord. Okay, so if there's any questions so far, feel free to come raise your hand in Zoom, and we can bring you on live. Okay, I'm going to go to our Market Chameleon. This is the homepage. I'm going to enter the site after logging in. So let's look at liquidity now. So liquidity and spread. So can anybody tell me or type in the chat which is a very liquid ticker? So you can see on the homepage itself, if you look at active options, your Market Chameleon is filtering out Is this it's still refreshing? It is filtering out the ones that have the maximum liquidity. So you can see Apple, Netflix are right here on the Netflix because today was earning. So let's look at Netflix. So if I go to Netflix here, you will see that options volume today was almost 250,000 options were traded just today. So that's a pretty liquid stock. So let's go to Netflix. I'm going to control click on this to open it a new tab. And we will look at options chain. And so I go to options and options chain here. And let's look at the volumes now today. So you can see that the volume of each of these strike prices. So 640, for example, which is at the money, 6,000 contracts almost traded at that price, and you can see the difference this thing. And if you click on this column, I want to look at the open interest. So open interest as these strikes is also important. That is, the daily overnight open interest, what positions are open at that particular position. So this one, you can see that it's pretty tight bid and spread. Now, even more than this, let's say, for example, if you're trading the indexes, right, SPY. So if you look at SPY, you can see that, it has massive volume, just 217,000. So typically, let's look at just the volume here. So we can look at historical 30-day volume. So you can see that almost 2.3 million contracts, puts and calls. So totally almost about 5 million contracts just traded today on this. So it's a very, very liquid, this thing is the index, of course, and you can see how tight the spreads are. So 1.9, 1.19 and 1.2 bid and ask. So it's just 1 cent difference. As you start going out of the money, the spread starts increasing. So let's say, for example, for 25 here, you can see that now the spreads are getting wider and the liquidity is getting smaller. So if you are trying to open positions at these strike prices, you will have to, either wait longer or you'll have to pay a premium. Okay, so that tells you the liquidity or the difference between this one. So opening and closing positions in SPY would be relatively much quicker than any other stock. So let's look at some other ones which are less liquid. So let me go to, we can look at implied volatility rankings. And I'm going to go by open interest, or let's say pick something which has a very high IV, but not very liquid. So let's say this RELY, right? RELY, it's not a penny stock. It's $33. It's got a very high IV. IV went up by 17% today, which is IV 30. And it's only options volume is 1,600. So let's look at this one. So I'm going to go in here and put in RELY, enter. So we'll look at the volumes. So you can see today about 410 contracts here, the hourly or minute by minute volume traded for RELY. And let's look at the coming up expiry, which is 19th of November, which is 23 trading days. And at the money, you can see that this is still 5 cents. It's not too bad. But as you start going out of the money, you can see that the spread here is 8, the bid and ask. There's almost a $1.70 difference in the bid and ask. Okay. So let's try to design a strategy around this. Okay, so I want to say I'm bullish on this particular stock. It dropped about 7% today. So I'm going to do a vertical spread. The IV is high, so implied volatility is high. So I'm going to capture premium by selling a vertical bull put spread or credit put spread. So let's say I'm going to sell the 30 strike, and I'm going to buy the. So as you see, when I start clicking on the bid and ask prices, it starts filling in the leg. So this is the first leg, and I'm going to sell the 25 strike. Okay, so you can see I'm selling. Oh, sorry, I'm selling the 30 strike and buying the 25 strike, right? So this is the vertical spread, and let's look at the profit loss diagram for this. And everything is populated from here. So you load the strategy into the analysis. I'm scrolling down, and you will see the payout diagram or the profit and loss diagram here. And this is what the strategy looks like, right? So I'm getting a small. Let me scale this a little bit more. Stock range, I want 10%. So I'm just changing the display. Let's make it 20%. So you can see, so I'm stopped out here at, this is the maximum loss, 445, and the maximum gain is $55, right? So here you will see that the spread is very wide. So I can expect to fill this if I want an immediate fill, 55 cents, right? For this, for per stock, so $550. And the midpoint of this is 1.05, so $1,005 for with the multiplier of 100, right? So you can see that if I get an immediate fill, if I fill at this price, 55 cents, I'm already losing $500 right there, 50% of my profit, right? So because if I fill at 55 and I want to close this position, I'll have to pay so much just to close it. The bid and ask spread is that wide. So it's really important that you, in this case, you want to get the fill closer to 1.05 or even better than this, because you're collecting a credit. You want this to be 1.05 or so. So this is what Market Chameleon is telling me. Now let's look at my platform, which is Thinkorswim, and we'll try to place the same position, right? The vertical bull put spread. So we'll go in here. I already have the ticker in here. So options chain for November 19th. Let me collapse this. And I'm going to a vertical spread. So in my platform, I have some shortcuts here. For example, I can right click on this and I can say I want to sell a vertical, right? So it'll automatically populate this. So I'm selling 10 contracts of 30 and the next strike is 25. So 25. So you can see that the latest, or when the market closed, the credit I was getting is 1.15. Now you will notice there's a little difference between Market Chameleon data and your broker platform, because Market Chameleon has got a 15-minute delay. Plus the market can move very fast, and between different brokers and depending on which exchange it's being traded at, the prices can vary a lot, right? So, but it will be pretty close. But you can see that already, I can get a better price than what Market Chameleon is selling, 1.15. And ideally, I want it higher than this. So I can try to fill it at.
So just let me know, is that telling you the price where you can get it done right there? Is that what they're telling you?
This is what Thinkorswim is suggesting the mid price is. It may not fill because there is really not much liquidity. You can see the volume is only 69 contracts traded all of today, right? And 25. But this is what technically the last price that was filled was this much. So that's what Thinkorswim is telling me, that it might fill for this much. So if I analyze this trade, you will see that the profit and loss diagram is pretty similar. I just have this trade here. I'm just simulating it. You can see it's pretty similar to what I see on Market Chameleon here, right? So here I'm making $550 credit, and maximum I stand to lose is 4,450. So let's look at in my Thinkorswim. So here below, watch this area. So you will see here that if I'm filling at 1.15, my profit is going to be 1,150. So if I let's say if I get a fill at 1.3, now this profit loss diagram will change completely, because the money at risk, which is $3,700 versus what I stand to make is $1,300. So the better fill you get, let's say if I get a fill at $2, you will see that now my diagram is changing even more, right? So this is really important what you get a fill at. So let's say, any questions so far, Will?
Nope, you're good.
Okay. So on Thinkorswim, of course, it's got a very good analysis tab, and you can see lots of different analysis. So for example, this gray boundary that you see behind is the one standard deviation. So this is what one standard deviation move looks like. If I want to look at a two standard deviation move, this is what, if this ticker or this underlying is going to make a two standard deviation move, then this is where it's going to move to. Or this is the current price, which is $34, and it can go all the way to 52 with a two standard deviation, or 21. And you can see it's leaning more towards bullish because that's what the options market is pricing it at. So if I look at probability analysis, you will see that this is where the price is currently. It's tilting more towards the bullish side. So that's what the options pricing is telling me. Going back to the risk profile, and this particular purple line tells me today, if I get a fill at $2, I already make a profit of $800 right here. But if I look at, if I fill it at what the market is, you can see that, right, if this is my zero line. But if I get a better fill, let's say 1.3, so I already made a profit of $150 right there. So if I fill it immediately and try to close it, I might be able to make $150. If I fill it for 1.30 credit and close it for 1.15, right? So if I fill it for 1.8, let's say, so I'm already in the money, right? So I'm making more money. And so that's why getting a good fill is really important. So when you're selling something, so I'm on the sell side, so I'm getting a credit, you want to get better than, so I'm going to, when I hit this unlock, it's going to get the market price, which is 1.15. I want to try and get more. So what I typically do, let's say I want to open 10 contracts position in this, or so what I might do is I'll try to say 1.15 is the market price. So I'll try, let's try 1.2, okay? And then I'll place this order and I'll say confirm and send. The verification dialog comes up. So here I'm configuring the max loss is $3,800, max profit is $1,200. My commission and everything, this is what credit I'll get after the commissions are deducted. I send the order, right? This is paper trading account, so it's not allowing me. But what I can do is I can place, we'll go on to the next point of my presentation, which is scaling in and out and laddering. So let's say my ultimate position for this, I want to until 19th of November, I have 31 trading days remaining, right? So I'm bullish on this. So I'm getting a vertical bull put spread or credit put spread. So what I can do is I can do this as an order type, not just a single order, but I can split this order into multiple orders. So I can say blast all the orders. And I say, for example, I want to open 3 I want to try at this price. And then I'll create a duplicate order. So now then I'll try 3 at 1.2. And then I will create another duplicate order and I will try, let's say 1.3, right? So now I'm putting in 3 separate orders at 3 contracts each, and maybe this one I'll make 4. So I have one order, which is 4 contracts. This is 3 contracts and this is 3 contracts. Everybody with me so far? So when I confirm and send this order, it's going to blast all these orders, 3 orders. So let's say one of them fills at 1.15, or let's say one of them, this lowest one fills at 1.15. Then I'm going to say, okay, that filled very quickly. I'm going to try 1.2 now, right? And if that fills relatively quickly, then I can try the next one. So now I have, totally I want to open 10 positions. But if I open only 3 today and maybe 3 tomorrow or 3, day after, I can ladder into that position or scale into that position. And also I'm trying to find out which side of the market can I be on, right? So the natural price is 55 cents and mid price is 1.15. So I can split my contract, split my position up into multiple orders and try it that way. because you want to just, try to do a little bit better than the market is giving you. Try to, you have to count every penny and try to ask for more to get a better fill. So that's one of the strategy, which is in stock trading. When you're just buying stocks, you can split it up. And for example, in here it's showing 3 different buys and 3 different scaling out of the position, scaling into the position. So similar strategies we can use for options as well.
Raj,
yeah,
I did have a question from
sure.
Our friend Mike from Texas. He was asking, what is a reasonable period of time to wait before you adjust your initial middling price? So obviously, if you're middling, you're between the market, so it sits out there. How often will you look at maybe moving, changing, adjusting your bid or offer?
So that's a very good question. That also there's a multiple factors that you got to look at. One is how much movement is there in the stock? How much time do you have to go? For example, if I'm looking at, let's look at, for example, NFLX, right? So NFLX, so let's look at the options chain. Just going to pull the options chain. So I have options expiring in 3 days, 22nd October. So right, for these ones, because the price and its earnings today, so the price is going to go up and down quite a bit, and there is a lot of gamma at play here when you're so close to the expiry. So let's just look at, for example, I'm going to make a position here, sell vertical. Let me clear all of this stuff out first. Single order, and I'm going to do it again, sell vertical. And so this one, and I'm going to analyze this particular trade. So you can see here that there is gamma and there's a big theta component to this. So this is basically very, very volatile. So the price for just the 2-day swing, this is the 1 standard deviation. The price can be moving very quickly up and down here. So this, if you're a day trader or if you're doing this kind of position, you want a quick fill, then you want to be kind of adjusting it very quickly. If I'm going for the same trade for a very longer term duration, let's say even into next year, so 22nd January, and let's look at the same kind of position. So sell vertical, 640 and 635, and I'm getting a credit of 2. So analyze this one versus this one. So this one, you will see that the delta, gamma, theta, all the Greeks are much more tame on this one. So the price for this is not going to fluctuate a lot. So if I get a fill now in 1 hour or tomorrow or even the next week, it's still going to be okay. So I can be patient with this kind of a trade, which is longer term duration, right? So because the expiry for this is in January 2022, so many weeks to go. Whereas this one is only a few days to go. So it varies on the duration that you got to go. It varies on the volatility of the underlying. It varies on what strategy you're doing. For example, if I'm doing on Netflix, let's say I'm going for the shorter term duration and I'm going to do an iron condor, a very wide iron condor, right? So the probability of this ITM is, let's say 15. I'm going to go from here, sell vertical. And so I did the put side, and I'm going to do the same thing on the call side. The probability item, I'm going to go at 15%. I'm going to say sell vertical. So I'm adding to that position. So now I have the call side and the put side, and I analyze this particular trade. So now this is an iron condor. So you can see that I'm pretty much safe as long as Netflix doesn't make more than a 1 standard deviation move. So this one, I'm capturing a lot of theta, but there is no gamma there. So there's hardly any gamma. I'm almost close to neutral, right? So this is delta neutral. So on this one, I can afford to, check every half an hour, 1 hour, whatever. So it depends on the strategy. Like I said, it depends on many factors. But you got to be looking at the Greeks for this. When you have a lot of gamma, That means that little bit movement in the stock is going to affect your profit and loss a lot. So it's more important in that case. Does that answer the question?
Yeah, I think that was very good. Thanks, Raj.
Okay. So let's go back to this one. So laddering in positions, like I said, the other way is one other strategy some people use depending on the account for legging in and out. So what legging in and out means is if I'm doing this as a single trade, right? This whole iron condor I'm doing, this is 4 legs. So I'm selling a call, buying a call, selling a put, and buying a put, right? So there's 4 different trades are happening, or 4 different legs are being opened with a single trade. So legging in and out can mean that I'm doing each leg one by one, trying to get the best fills on each of those legs. But that can be very risky because you could open up, especially on a short duration like this for 22nd October, if you just open one leg and you don't get a fill on the other leg, you could have an infinite loss situation. So I never ever do leg by leg. I typically open the whole strategy as one trade. So simultaneously, I opened all the 4 positions or all the 4 legs, or close all of them at the same time. Also, your account may not allow that because depending on your margin and your buying power and stuff like that, your broker may not allow you to do legging in. Okay.
We do have another question coming from Mike.
Yeah.
Is apart from middling for entries, should we make sure we have a middling position for exits at pre-specified prices?
Yeah.
And any suggestions for missing when we do not want to sit in front of the computer all day?
Yeah, that's a very good question. And this is, it depends on, if you're an active trader, if you're in front of your screen all the time. Some people do that and they want to get the best price, so they do not put in closing positions. But my habit is I usually, let's say I open this position, I'm going to delete this one. So let's just assume that I have opened this position at this one. So what I do is immediately I do I'm going to analyze the opposite trade, right? So the opposite trade of this is now buying this condor. I sold this iron condor and I'm going to buy it back. And I want to buy it back. Let's say the maximum profit I make out of this position is $1,260. So I'm going to be happy with, let's say, $1,000, right? Or even 50%, $700, let's say. So I'm going to close this position at, let's say, 0.5. I make $760 profit at that. So this is, I'm analyzing these two. So this is my opening position. This is my closing position, right? So then I want to place this order, confirm and send. What I do is, as soon as my position is open, so let's say in the morning, when the market is very active, I put in this order and I just check in once in a while, but did it fill? As soon as it fills, then I go into this thing. So I look at my filled orders. The order has filled. Then I go in here and then I start putting my closing order immediately. So if I'm not, let's say I'm sick, I'm in the hospital, or I'm away, or I'm not at my desk. So I'm running my system on autopilot in a way. So what I do is I put in the closing order, confirm and send. I'm going to say this order is good till canceled, right? Not just for the day, but good till canceled and at the best exchange possible, at the best prices. So I put this good till canceled and I confirm and send this order. So then what happens is my closing orders are already all set. So even if I'm not in front of the computer and Netflix does its thing, and it will automatically close out the position for me. Okay, so I hope that answers the question.
Yeah, that seems great, Raj. Thanks. Mike, let us know if there's any other question following.
So usually, even on Discord, whenever I put my trades, I don't want to be, glued to my screen all the time, watching the market going up and down and, looking at all the candle bars. I do my calculations right in front. So it's very important that you do all your analysis up front. Before opening the position, you do all your due diligence. What is the maximum you stand to lose? What are you going to gain? What are the probabilities of this position? You do all your math, And after you're certain and looked at it and made up your narrative and you analyze it from all different angles, you put in your position. And once it's filled, or you put in your order, once it's filled, you put in a closing out order immediately. That's what I do. Now, once I have a closing order, let's say for example, does not mean that I have to stick to that. Let say analyze opposite. So let's say today I think that I'm happy with $760. So let's say this is, I'm going to close it out at 50 debit, right? So I'm happy with 760. But tomorrow I think that, Netflix is even more trading in a narrower band. So I want more profit. I can replace my goodwill cancel order now. Say I want to close it at 30 cents, right? So with the goodwill cancel order, you are always free to go and tweak it whenever you want. But you are assured that even if you are not at your computer, there is an order there which is going to close out your position. So, but that doesn't mean that you're stuck to that price. If your analysis changes, if your story changes, you can always go in and tweak that goodwill cancel order and revise the price. Or even close it immediately if you think it's going to make a loss. If the price goes out into what I call as what we call as the house of pain. So, in our Discord, we use some colorful lingo. So this side is our house of pain, right? Because you are losing money. And this is our house of gain because we are gaining money for this particular strategy, right? So if you see that,
I don't like the sound of house of pain, Rob, I must say.
I don't think anybody likes that.
Everyone's got to go through it, though.
Yeah, for sure. And we also have another term, which is the no man's land. Basically, if the price is, just staying in one place, it's neither in house of gain or pain, and then it's in no man's land. It's like no profit, no loss kind of situation. Okay. So this is also, if you're doing multiple contracts, then scaling in and out. Or another way to look at it is, let's say the other position that I had, which was RELY, I think you were looking at. RELY. Okay, I think I deleted it, but let's do it again. Sell vertical and analyze this position. So now this has got almost a month to go, right? We are on 19th October, so 19th November, so 4 weeks to go. So I open this position, and after a few days, the price of this particular underlying ticker has moved in here, right? So so this is the price. It's now moved to 41. Today's price is 33, but it's moved to 41, let's say tomorrow. And then I can roll this in forward to instead of this, I can roll this in now to my profit loss diagram will look like this. So bring in tighter, or I can add to this position, right? Or let's say I have only 2 contracts. So now tomorrow the price moves up and my conviction goes even higher that it's going to move in the bullish direction. I can always add more to this position. So I'll add 2 more to this, 2 more to this. So that's also another way of scaling into the position when you have longer duration. So with that, you also are doing dollar cost averaging, right? So you let's say you paid too much, volatility was high when you opened this, or volatility was low when you opened this position, because you profit when the volatility is high. And for volatility goes high the next day, plus your conviction is bigger, then you just let's say you got credit of 2.45. Let me bring this back to what today is. So you got a credit of 2.45 today. Tomorrow for the same position, you're going to get a credit of, let's say, 3, right? So you can open more positions tomorrow 3. Let's say now then you can get 4, right? You move in. So then your dollar cost averaging your position into that. So your net cost of getting into this position will be much lower because you're going into it step by step. Okay. So though that is all that I had. Now let's look at look at how Market Chameleon helps in this regard. Okay, so I'm going to go back to our Netflix here, or NFLX, and I will do that. Let's look at one of the ready-made positions here. So stock info summary. I'm going to look at what Market Chameleon is identifying as trades. Let me look at best by win rate. So I have a bull put spread here. Well, this one, the bear put spread, 67% win rate and with a good edge. I'm going to look at this particular position. So I click on this one to get populated in the options chain. And so when I load my strategy here, so you can see that I am selling the 625 and buying the 630 puts, right? So selling this 625 here and buying the 630. So this is the bearish position, and you can see I'm going to get debit. I'm paying for this because it's a bearish put 2.3, and the midpoint is this is the midpoint. So so 2.3 is what I would have to pay. So I want to fill it at lower cost, which is $2, right? So this is very important to look at when you're analyzing the position on Market Chameleon. Let's say now I'm going to reverse this. So instead of this, I'm going to sell this and buy this. I'm going to reverse this to a bullish position now. Load strategy. But the profit loss diagram you can see has turned, and I'm getting a credit of 1.7 if I want an immediate fill, or 2 is the midpoint. So I want to be either getting 2 or better than 2 for this position, right? So as you add more and more positions, so let's say if I make this an iron condor and I want to go, I'm going to look at, one standard deviation. So I click on this. This one is going to highlight which is the one standard deviation strike prices. So I'm going to do sell the 705 and buy the 730, right? So this should now make it into an iron condor or an uneven iron condor. So let's look at 20% move. So you can see that it is a uneven iron condor here, and then you can look at here the midpoint. So you use as a reference point. So this is what you're going to get credit, 3.34. Now you duplicate the same position on your broker platform and you'll see the price there. So you get an idea between Market Chameleon and your broker platform and the market, that you get a better idea of the price when you put in your order. Okay, because this is not going to never 100% going to match what your broker platform has, because there's a little bit of lag on this. But for positions like an iron condor, it should be pretty okay. If you are doing at the money positions, then you will notice that there is a little bit of difference between the prices that you see here and what you see on your broker platform. Okay, anything else, Will? Any other questions?
No, I think it was a great show. It led to a lot of chat, actually. Goat showed up, the mayor from Naples, Florida. Goat's talking about his BLK trade. I don't know. He said he exposed it in the trade channel he made you create for him, which I love that you created it for him. But he said he exposed the BLK trade. And anyways, for those who don't know, again, if you join late, Raj, Goat's in there. Jake was nice enough to get the channel started, but a bunch of chameleons do go over, and we recommend anyone who wants to check it out, go check it out. I'll put the Discord link in again. Anyone's welcome to the invite. And we did have one last thing from Mike Chandler, my favorite well, he's tied for my favorite Texan with Goat. He was saying, would Raj willing to share his PowerPoint slides with the community?
Oh, yeah, actually, I can link that. And the better thing is the video on YouTube, because there's not really just a few bullet points on the PowerPoint, but I can share the link to this. It's really, if you just look at the PowerPoint slides, you're not going to see much there. But I can definitely share it, yeah.
All right. How will you share that?
Better to look at the YouTube video.
Maybe come over to the Discord to get the share.
I'll share the link, and in fact, I can just share it right now.
Oh, all right. There you go. You'll share the link right now. You don't even have to go to the Discord.
Yeah. So let's see. Anyone change to anyone with the link is a viewer, and I've copied the link. Done, and I'll paste it in Zoom and also on Discord. So there you go. Okay.
And I'll put that link in the YouTube chat as well, Raj. That way everyone gets to see your excellent PowerPoint, which I must say is excellent. You and Jake both really bring it with your webinars. Thank you so much, my friend.
Thank you. Thank you for having us. And I'm glad to share. It's always good. I get to learn a lot too by coming on, and from the Discord, the Market Chameleon community as well. So it's always good to have.
Jean actually says she loves you, Raj. Thanks very much, which is always nice to hear from Jean.
Thank you, Jean. I love you too.
All right, everyone. Again, get over to that Discord. Raj, we will see you next month. It's the third Tuesday of every month. Correct, Raj?
Yeah, third Tuesday.
Same Tuesday every month from now until either Raj or I grow hair. If one of us grows hair, we will not be here. I swear that.
With no unforeseen circumstances or whatever, we should be here as long as.
Well, with global warming, Raj, anything's possible. It's getting warmer. Maybe our hair will come back. All right, everyone. Thank you so much. Jake, thanks for coming into the chat as well. We will see everyone hopefully tomorrow morning on the live Market Chameleon pre-market show with Dimitri. I'm sure he got some emails overnight that he'll want to discuss and bring everyone, put them on the right track when he's looking at the Chameleon. All right, Raj, thanks again.
I'm hoping to get Dimitri and me and you and few other active chameleons together about talking about new features and things like that. Just like a panel discussion, no PowerPoint or anything like that. Talk to Dimitri about it.
Wait, are you talking about another show, Raj?
Another show, but it would be more like a chat than a show.
All right.
With suggestions, and it's always good to talk to Dimitri. What new features are coming up? What such ideas because we got a lot of ideas, and I know you guys are busy.
Yeah, no. Have you ever, if it's just going to be a chat and we don't have to show our faces or show the Chameleon product or anything, is it something we could do on the feature? Have you seen it on Twitter?
Yeah. But Twitter is more like a public forum, right? If you are hosting a Twitter space, it's called a Twitter space. You could have thousands of people join in who have no idea what the space is. Just because it's there, they'll join in.
Yes, true.
Yeah.
Who wants thousands of people listening to you? You only want a couple active chameleons. That's all we want.
If you're talking about politics or something, Goat might be interested in stuff like that. Vaccine.
No, Goat never goes political. Never. He's all about MX and making money in the market. All right, everyone. Again, thanks, Raj, for joining us from the West Coast. Thanks for everyone for coming on. And again, tomorrow morning we have the Market Chameleon pre-market show with the main man, the main chameleon, the king, Dimitri. So that's always a great show. All right, Raj. Thanks again, buddy.
Thank you, guys. See you tomorrow.